What I would like to do is invite Mr. Michael Acevedo. He's the Group Vice President of South Florida Area Lending Manager for SunTrust. And I would love for him to come up and invite our next speaker because they work very closely together. And our next speaker who he will invite up is Nadja Vidal with Freddie Mac. So give Michael a round of applause, please.
Thank you, David. I really appreciate the kind words. Good afternoon, everyone. So I'm here to invite onto the stage Nadja Vidal. She is the Affordable Lending Regional Manager, Southeast, for the Affordable Lending Division of Freddie Mac. Nadja works very closely with lenders and sales partners to develop and execute plans for meeting affordable lending. So she is a tremendous friend in our industry. She is a 20-plus year veteran of our industry. She doesn't let me say how many years over 20. She just says 20 plus. All right, okay. She is an incredible professional. She's going to have a wealth of information for you. But most importantly for me, she is a dear, dear friend. So without further ado, Nadja Vidal with Freddie Mac.
Can you hear me? That's very loud. Okay, so thank you, everybody. How's everybody doing today? Fantastic, thank you. Like my snazzy new video? Okay, because we're all in this together, guys. And I want to thank you, everybody, for your time. Does anybody know what Freddie Mac does, what we do, what we're here doing today? Not so much, but we will find out. I want to thank SunTrust for inviting me here today, because if you know anything about Freddie Mac, you know that we don't actually lend to customers directly. We count on our lender partners to go out there and do the heavy lifting for us. But like the video just said, we're all in this together. We are all for home. And a lot of the professionals that are here today, everybody's talking about your own personal business, and yes, your personal business is important, but what we do as a community is even more important. So what we want to talk about today are the 4 pillars of what we do. Insights, we're going to share some insights today. We're going to give you some education, products, and solutions to increase your business. Because we like talking about the rate of home ownership, but at the end of the day, how do we actually impact the rate of home ownership? We have to close deals. So thank you again to SunTrust for being out there and being a great partner and closing those deals for us. Because it's important for us to take the data that we have here and then figure out what the need is. And when we have the right partners, that's exactly what we do. Special shout out to David Kurz and family. Where's the Kurz family? There you go. Thank you for that, because again, we are all in this together. When we talk about all for home, we're talking really about that ecosystem. It's our lender partners, it's our real estate partners, it's our title company partners. We are in this together, and I want to applaud those of you that came here today, because that is important to all of us, and we are all part of the solutions when we're looking at how to increase the rate of home ownership. So what do we know about the state of the housing market today? Home ownership rates are low. They're not as low as they were 3 years ago that were at the lowest, but they're still pretty low. Again, how do we impact the rate of home ownership? We have to close deals. That's how we impact the rate of home ownership. Everything else is just a bunch of tactics. So we're going to look at what the rate of occupancy is. Now, the occupancy rate for the US is at 63.8, and the renter occupied is 36.2. In California, that renter occupancy rises to 45.5. So you've got almost half the people in California are renters. You look at Florida, 35%, and then New York is at 46% renter population. That is way too high. Now, in Florida, those numbers are a little skewed because you've got that 64%, but in South Florida, that number drops to 53 of owner occupancy. So those are the 3 most unaffordable places in the country. And we need to figure out how we're going to bridge that gap. How many of us sometimes have that customer and things are just too expensive? They're really too expensive. So it's important for us to have these kind of conversations because we're doing everything we can, and we're going to discuss what those tactics are that we're doing so that affordability becomes part of the conversation again. Because not enough of us are having the affordability conversation. We talk about things are expensive, but then we don't talk about how we're going to address it. So we do know that 92 million Americans are mortgage ready today. Is that number surprising to anybody? It's a little surprising. Do you hear that credit is tight? Is that what we hear? Somewhat? Do we hear that credit is easy? What are we hearing? Easy, tough? It's tough to get a loan? Is it tough to get approved? So-so? Well, right now, it's as easy as it's been, and 92 million Americans are mortgage ready. That's a little surprising to me. There's 22.5 million millennials that are mortgage ready. Is that surprising? Because a lot of millennials, believe it or not, can afford, but that's not what we hear out there. So what we know is that there's an opportunity here with the millennial population at 22.5 million of them being mortgage ready today. 2.5% Asian Americans are mortgage ready, and 14 million Hispanics are mortgage ready and haven't bought yet. Can I get a shout out to the Hispanics? Thank you. Okay. Just checking to see if you're still here. Okay, so the Hispanic population, there's an opportunity there. Is that an underserved community still? Yeah, because only 17% of America is Hispanic, and only 7% of mortgage professionals are Hispanics. So there is an opportunity there because you don't necessarily need to speak Spanish to do business with Hispanics, but you need to understand the culture, as with Asians, as with African Americans. And there's an opportunity there according to those numbers. So what do we know about the household demographics? We know that 653,000 new household formations in 2013. Just 4 years later, 1.4. Double the household population. That's why we keep talking about millennials. We have to pay attention. So a lot of us just kind of ignore the whole millennial conversation. We've broken down the millennials into 2. Millennials are 39 years of age and below, younger, between 19 and 39. Young millennials and old millennials. That's a real thing. Can you imagine somebody 39 being called old? That's how I feel sometimes. I'm only 29 though. But in the mortgage millennials, that's what we're looking at, that break point, because you can't compare a 20-year-old to a 35-year-old. 35-year-old is actually forming their household. So a quarter of millennials live still with their parents, but 75% of them do not. Millennial households in 2035 will be almost 50 million households. As of right now, about 18, because in 2015 it was 16. Minorities' share of household growth projected between 2015 and 2025 will be another 75%. That's a big number. So what that means is that we're paying attention to what that demographic looks like. When we at Freddie Mac, we were talking about how every single one of us has a place. When we at Freddie Mac look at these numbers, that's how we're using those numbers. We're using those numbers so that we have the right product, so that we have the right approach, so that we have the right planning, that we have the right pricing. This is how we are going to get it over the threshold so that we can increase the rate of home ownership. And what do we know about the face of the borrower? If you look at that first slide, that is white, non-Hispanic. Look at how that population decreases. The Hispanic population is the fastest growing. African American population stays the same, and the Asian population is the fastest growing. Isn't that surprising? Because we hear a lot about Hispanics, but we don't hear how fast the Asian population is growing. And we are paying attention. And that's when we make certain changes in our guidelines, like sources of funds and credit score requirements, because we understand that the population is growing. We understand that millennial population is growing, and there's something called the gig economy. How long do you think a millennial stays in their job these days? Any guesses? 6 months. Okay, maybe, some, yes, because the average is actually 18 months. 18 months. Can you imagine if we would just say, sorry, we can't finance anybody that has less than 2 years on a job? That's what we used to say. That's not necessarily what we're saying today. Okay, so be careful when you encounter those customers that you think might not qualify. What is the first thing you're going to do? You're going to contact your mortgage professional because the products are changing. Minority share comparison for the U.S., 62% white non-Hispanic, African Americans at 12, Asians at 5, Hispanics at 17. And look at how that shifts California, Florida, and New York. Look at those numbers. Some states have more of an Asian population. Some states have more of a Hispanic population. Florida and New York are above the national average for African American population. That might be surprising to some. What else do we know about first-time home buyers? We know that first-time home buyers, that trend is going down. We know that we were at 36%, then 35%, then 34%. The other thing that I want to make a note in this pie chart is that of all the first-time home buyers, 57% of them were married couples. If you look at the second place, you don't see unmarried couples, you see single females. Thank you. So single females. Does anybody go out there and market single females? No. Why? Because we're assuming? What are we assuming? They don't make enough money. Because we know that single females make less than single males. However, when it comes to homeownership, the rate of homeownership is above unmarried couples, which is why it's so important to have meetings like today, because the way that we change the conversation will impact our economy. Even though the income is not as high as we would like it to be, the fact that they are motivated and the fact that they're out there getting it done is impactful, because that same group of people they're teaching us a lesson, that there are a lot more people out there that are mortgage ready and we're just not addressing. 60% of the people that are mortgage ready, income ready, credit ready, are too afraid to apply. And if the single females are out there changing our minds, ladies and gentlemen, there's something to be learned there. Because there are other groups out there that can actually qualify, and we're not talking to them yet. Why? Because of the myths. So we stop ourselves from having those conversations, including millennials. Sometimes we don't want to have conversations with millennials because we assume they can't afford it, when that's not necessarily true. Median age of a millennial, of a first-time homebuyer, is 32, with an income of $88,000. You do not need to make $88,000. As long as we keep changing that conversation, we will make an impact on our business. 93% of those mortgage-ready millennials can afford a property. Is that surprising to anybody? That's a really high number. Again, the assumption is that millennials cannot afford to buy a place, and they don't want to buy a place, when we know that 85% of them do want to buy a place, and buying is actually a good thing. 83% of them start their sourcing online, but only 14% of millennials actually have a mortgage. There is an opportunity, and we have to go out there and understand what that opportunity is and do what you can to change those tactics to bridge the gap. So are we clear that millennials want to buy? Yes. Are we clear that we're going to change our tactics? Yes. 93% of them can afford it. That's impactful. Be very careful not to not just assume that they can't. So what do we know about the population age? If you look at that 25 to 34-year-old bracket, in the US, that's 13% of the population. California, that's 14.9. Florida 12.8, and in New York 14.6, above the national average. If you look at Florida, Florida is divided into two, South Florida and everybody else. So in South Florida, the number is actually about 14%, above the national average. So we need to be paying attention to millennials more than most. Average credit score in the US, 694. California, 699. 683 for Florida, 704 for New York. Surprising? That's probably higher than what we assume. Be careful with the assumptions. The data is powerful. Use the data, change your business, change the conversation. So when we're looking at those borrower needs, we look at all that data, we're trying to figure out, well, what are we gonna do about it? Well, there's a couple different things we're gonna do about it. We have the low down payment options. We have the Home Possible, 3% down with an income limit. We also have the Home One, 3% down with no income limit. We also have the HFA Advantage, 3% down with down payment assistance with one of the HFA programs that are out there. Do we do a lot of business with housing finance agencies? Not yet. Not yet. So for those that do business with housing finance agencies, where are you? One person, two people. Talk to them later. Because there's definitely an advantage to doing business with housing finance agencies with an MI of 18%. So it is impactful, okay? So we got some plans here. We're writing down some notes. We have some action plans coming down the pike. The other thing that we're doing is we're making it easier for you to discover what down payment assistance programs are out there. So I've got the address on FreddieMac.com where you can go and figure out with that hyperlink, this doesn't have a pointer, with the hyperlink that tells you the down payment assistance, when you put in the address and click send, it'll tell you if you qualify for the Home Possible. It'll also tell you the down payment assistance programs that are eligible for that address. Do we underutilize that resource? Yeah, we do. Why is that? Because we think that sometimes we think that if you're looking for down payment assistance, you may not be worthy of a loan. Is that a myth that's out there? Do we think that sometimes when you have down payment assistance, it's going to take 6 months to close a loan? Yes. Do we have those misconceptions out there? So what are we supposed to do with that? How about we make sure that we talk to somebody that has experience doing this kind of business, because it should not be a detriment. There's actually a huge advantage to doing business with folks and allowing them to do the down payment assistance. It's actually good for our community. It's cheaper for our community and it lowers our tax bracket when we are able to give people the down payment assistance. That's a game changer, because once you hit on that hyperlink, it'll tell you who has money, when, who to contact, what's a phone number, and what's an email, so that you can get your customer that down payment assistance. Because when we started this conversation, you told me how unaffordable things can be. Would down payment assistance help in that unaffordability? Of course it would. We're looking for solutions. That's why we're putting together events like this, so we can find out what the data shows, adjust our tactics, get solutions, and close a loan. Oh, condos. Who's a fan? 2 people are fans of condos, so I'm gonna skip right over that. What do I think is important about condos? Specifically in Florida, we talk a lot about 25% down, but what we're not talking about is how do we get folks to learn how to do a fully approved condo project? Do we not have enough of those conversations? Because we have those resources that could help you impact your business. If you can get a full project to become fully approved, who do you think is going to get that business? You are. We're looking for tactics, ladies and gentlemen. Be enthusiastic. I know we're at the tail end of a 2-day event. Look for your tactics, close your loans, make an impact. What else are we doing? Choice reno, manufactured home, green choice, community land trust. We are looking all over the place under every rock to make an impact, because we understand our position of leadership. Well, so should you. Because when I was invited to come here today, I was told that the leaders of the real estate community would be here today. And so what we're looking to do is uncover tactics, plans, and ways to increase our business. So these are the innovative things that we're doing that you will be hearing more about in the coming months. What else do we do? Marketing templates. We want you to help you grow your business. When we talk about partnerships, there's a reason for it. We got great products, but if you can partner with us in adjusting your marketing tactics, that might be helpful. Because what do people want to know? They want to know that you're the subject matter experts. So when you have proper marketing, you are indeed the subject matter experts. We have the Real Estate Professionals Resource Center. You will get a copy of this presentation as well so that you can sign up for the subscription center. We will share with you those insights, that education, that opportunity, so that you can increase your business. The My Home website, it's a great resource for you to tell your customers, because when you go through the My Home, we don't allow anybody to advertise on that site. So it allows you to understand what your payment is. Should I buy? Should I rent? What's my payment? Is this a good thing for me? And you're not losing your customer to the World Wide Web. I've heard it's not a good thing. But at the end of the day, you are the critical link. When I came here today, I keep telling you how important you are to our overall business, how important you are to the ecosystem. I mean that. I'm not just here to talk at you, but to talk with you, because this is important to every single one of us in our community. The way that we understand our data, the way that we are not misinformed, the way that we take our positions of leadership, because you are the critical link. Our consumers are still coming to you. Our community is counting on you to demystify a lot of what's going on here, because it's important to every single one of us. And if this has been helpful to you, I want to thank you, and this has been my Real Talk. And I did it on time.